Today, folks, we got to dive into Pfizer stock. It is absolutely tanking and now is offering a 6% dividend yield after its earnings. Is it a buying opportunity? Is it a value trap? Well, we're going to uncover what's going on with the company while also comparing it to things like Johnson & Johnson, AbbVie, some of these other medical stocks, and then maybe just ask the question, is it better off just buying a medical or biopharma ETF to kind of get the best exposure of all these companies, because some of these are very cyclical. And if this is a conversation you'd appreciate, damn it, go down there, hit that like button, subscribe for videos if you like these kind of videos, right? Especially for you dividend lovers, because I used to own Pfizer and I was glad I sold it in favor of SCHD, that dividend equity ETF that does give me some good, medical and biopharma exposure here. But man, ever since the pandemic kind of came and passed, they haven't been making nearly as much money as they were anticipating. They're having to write off a lot of the vaccine stuff. But I mean, we're talking about a 6% dividend yield, a company that is now down 54%. And just in comparable here, I mean, we're talking about lows that it hasn't really experienced since around even before 2014. I mean, it's quite abysmal to see a stock drop this much, considering their revenues have declined to annually, I think it was about 58 million, is it in the billion? Sorry, $billion. We'll take a look at their actual earnings, but I think on the last earnings now for Q4, it dropped down to about 58 billion. And we can see, because this is only for the third quarter, but we can see a pretty rapid decline and an even further drop on the fourth quarter. And I think it's all because they had a one-time write-off, because basically their EPS was basically 37 cents, which was down 93% year over year. And this was in conclusion to a significant impact by a one-time event, which was a write-down. So this isn't something that's going to persist moving forward. And 37 cents is just absolutely abysmal, considering they posted like $1.80 or something the quarter prior, right? But what you also have to keep in mind here is they've reaffirmed the full year 2024 guidance, providing basically 58 again to $61 billion. And again, the revenues for 2023 were 58.5 billion. And if we just take a look at that revenue chart here again, if we came down to about 58 billion, I mean, it is still well above where they were back in 2017 and 2018 timeframe. And if their earnings stabilize, their earnings should be much, much higher than where they are today. So this kind of comes back into a company that is likely going to head into a recovery period. And I think the stock, just based on that alone, has probably been oversold at this point, because again, the stock isn't below the revenue and earnings levels that it was in 2017 and 2018. So realistically, if you believe that the earnings are going to recover after that significant one-time, write down, that there's probably some 30% upside here in the coming year, which might be nice to lock in a 6% yield today. That probably looks unaffordable at the current dividend rates or the earnings rates. But again, you have to imagine that this is write downs and unsignificant things into the future. They're not going to persist, right? But Pfizer's dividend hasn't really been a huge growth driver. From 25 cents a decade ago to 41 cents isn't something that's doubling. I wouldn't call it a huge growth beast anymore. It's just kind of an aged company that's trading for $150 billion that isn't trading, I think, in many of the growth vectors that, we're seeing in some of the sectors of healthcare, right? I mean, they've got some growth drivers here, and they recently did an acquisition that I think is going to help, but you'll have to do a lot deeper diving in comparison to something like Johnson & Johnson that I just think is a much more stabilized and diversified portfolio base, and you see it in their stock price, right? I mean, you look at the stability of the growth, you look at their revenues, extremely stable. And a lot of this obviously having to do with the diversified of oncology and like things like Tylenol, Band-Aids, and they own like just a whole slew of medical and pharma-based products. But their company reaffirmed guidance as well for 5 to 6% growth. This thing is also kind of a matured beast here, where these are like your retirement kind of stocks. Like, you're going to get really consistent dividends. You're not going to get any kind of crazy outsized returns, but you're going to get what we call reliability. But again, they also have a robust pipeline of a bunch of products coming out, from surgery to orthopedics to interventional solutions and vision. They've got a ton of stuff going on here that looks very advanced in these industries. So lots to pay attention to here, especially with J&J if you're a fan, because the dividend's gone from about 66 cents to about $1.19. So again, not a full doubling, but more in line with Pfizer. I think a little better than Pfizer's dividend growth, but nothing outsized by any metric. So I really like these two companies. They've definitely been ones that I followed a lot, but they're not the primary performers in the medical field, right? You look at something like AbbVie here, and AbbVie over the last 5 years has been just an absolute growth beast. I mean, it's trading for a pretty high multiple, but man, the history on a company like that, even Merck and Company, absolutely been crushing it here. These ones haven't posted earnings just yet. You look at something like United Health Group, which is just an insurance-focused company, and they've been crushing for insurance. I mean, they're double-digit, revenue growth rates and stuff like that. 5-year performance is great. The 2015 to now is like, maybe not as good as Apple, but Man, it has been a straight up into the right kind of stock. And this is now one of the biggest pharma companies that exists. And I think it was sitting in one of the top 10 largest companies when tech sold off in 2022, right? For almost, getting into that $500 billion market cap for an insurance healthcare company. So the question is like, Pfizer better or one of these other ones better? Honestly, if you're looking for value, you can handpick some of these if you're just kind of an income oriented investor. Because if I was income oriented, I would definitely be picking up, Pfizer every day of the week now because I still have faith in their business long term, and they're still a conglomerate that I think is being under recognized in the current market because of the negative headlines. But honestly, you can also, if you're looking for growth and stability and you're younger, you don't need dividends, you like the healthcare space, SCHD, I think there's some great ETFs that offer that diversity. Heck, even the S&P 500 gives you some exposure to a lot of these companies. But there's the Vanguard Healthcare Index, which has offered fairly reasonable growth and is going to be, again, one of these more protected recessionary based kind of industries where you're not going to deal with the cyclicality, I think, of maybe perhaps tech being overvalued because, there's always going to be significant growth in healthcare just because everybody needs healthcare. The aging population is getting much bigger because we're not replacing them with newer babies. So there's going to be a lot of attention on healthcare, especially with genomics and editing and all that coming into play. So if you like the sector, you can get a lot more stability just by buying this ETF here, which, has United Health Group, Eli Lilly, Johnson & Johnson, Merck, AbbVie, Thermo Fisher Scientific, Abbott Laboratories, Pfizer. Now, you're not going to get huge yields off this by any metric. The yield on this is 1.37, which I think is actually in line with the S&P 500. Expense ratio is only 0.1%, which is fairly low. But honestly, when it comes to healthcare, you're either on one of two baskets. You either want it for, a defensive play in your portfolio, protection against market volatility, or you're buying it for income. And if you're buying it for income, you might as well hand select things like Pfizer, or again, I think SHD gives a good resemblance of some of these companies as well. But Pfizer, J&J at a 3% yield, AbbVie's yielding a nice 3.78%. Merck and United aren't nearly as attractive, but I'd love to know what you guys think about the healthcare space. Are you picking up any of these medical stocks like Pfizer? I'd love to hear about it, but stay cool, stay awesome. And as always, I look forward to catching you in the next one.